Hey everyone,
Hello,
welcome
hello.
back.
Back
Happy
with
Sundays with Steadyworth.
Happy Sundays with Steadyworth. Tonight, we are talking about how to make sense of the stock market, even without a finance degree, which I am not an expert at, but I'm still learning and growing every day. So super excited to have you guys here. Sorry that we did not make it to you live last weekend. We had some family in town and we were barbecuing it up
And
every
decided just to
day.
celebrate the holiday. And so I hope you guys had an awesome Labor Day and we're cruising
We're back
into what
on.
it feels like sometimes summer ends right after Labor Day, even though technically we have about 14 days left. And so I think the
Right.
first day of fall is the 21st, 22nd. But without further ado, we're going to hop right on into today's show.
Yes. And so I'm going to be picking your brain a little bit as a CFP, just trying to get really crisp and clear on stock market basics, what people need to know, whether you're a beginner, intermediate. I don't know that you a necessarily advanced person would gain a lot from this, but still might be a good conversation to tune into. But if you're a big beginner, you've heard about the stock market, you want to get more involved in the stock market, this episode is definitely for you. So to kick us off, how would you explain the stock market to a teenager?
Um, I would say it's a market where you go to buy things. And I would equate it to trading baseball cards. So it's a market where you go and buy small portions of companies. But if they couldn't equate to, owning a portion of a company, I would equate it to trading baseball cards. I would say, when I was a kid, I had some baseball cards. And, of course, I mean, every player has a baseball card, but some cards are more valuable than others. And so the stock market is the same way. It's like when you're buying stocks, you're buying fractions of companies, and some companies are worth more than others. And so their stock tends to cost more than others, and it tends to perform more than others. So if you have I'm going to say, since I have on my Ace hat, if you have a Ricky Henderson rookie card or a Jose Canseco or Mark McGuire rookie cards, those are going to do much better than if you have, I don't even know. I can't even think of an off player during that time because, we think of the best ones. So even right now, if you have some stock that's, an Apple, a Tesla, a Google, it's going to be much better than some other company that maybe you've never heard of before that's still publicly traded. So a lot of companies can publicly trade on the stock market, but but just because they are publicly traded, that doesn't mean that their stock is actually going up and reflecting something you want. Just like when you buy these huge packs of baseball cards, if you're lucky, you get a great one, but most of them aren't worth anything. That's why they're selling them to you for 99 cents. Or I don't know
Yes.
how much they are now, but back then.
Back then. So, I mean, when you say stock market, I mean, this is kind of just coming to my mind as you're explaining this. It's a market where you can buy stocks.
Right. So it's just like if you think about like the supermarket where you go and buy groceries, it's a market where you go and buy stocks. And there's a few different things for sale. So there's stocks, which is ownerships of companies, fraction, you own a part of a company. There's bonds, which is loaners, where you make loans to companies, loans to municipalities. And then imagine if you went into the grocery store and you said, hey, I want to buy a meal that's already complete. So instead of buying, I want to buy a meal that's already complete and I'll cook it at home. So instead of buying the individual ingredients, you go and you buy a package and they've put together, let's say you're making spaghetti, and they have in this package that you buy, they have the noodles, they have the sauce, they have the sausage that you're going to put in there. Or whatever vegetables. If you're going to put some bell pepper and onion and garlic, mix that in there. They also have a bottle of wine in there. They have, all of the things that you would need, a garlic bread to make up that whole meal. Well, then you could also, if you went to the grocery store and you could buy a ready-made the stock market also has something like that called a mutual fund or exchange traded fund, where you can buy a basket of goods. So it's multiple different companies and it all comes in just one purchase. And so it gives you diversity in that one purchase.
Okay, cool. And we'll dive a little bit more into those terms in a minute. But when, even as you start going down this train, when you talk to people about the stock market, either for the first time or, their clients, like what is the first thing that comes to mind for them?
There is a mix of emotions when it comes to the stock market, and it a lot of times just depends on their previous experience. So there's multiple. So sometimes it is, hey, that's too risky. I don't want to put my money at risk. Sometimes people see it as a place for opportunity where you can make money, and sometimes people just see it as a place of confusion because they hear all these terms, they see the news, and they're like, "What is it going this way? Is it going that way? What's happening?" For me, it is, I've always thought of it as a way of opportunity, even though I grew up in a family who didn't know much about the stock market, my immediate family, like my parents, but my grandfather, and I think I've shared this story on
Yeah.
here before. Yes, he was really into the stock market, even though he and I never met in person, and he died when I was a young child. But he made $250,000 one day trading in the stock market in 1967. So hearing that story, I always felt it was an area of opportunity, but
A
you know,
magical place to make money is
right, a
what we
magical
normally
place to make
say.
money, but obviously you have to figure out how do you align yourself with that to make the money.
Yeah. Yeah, and just from my experience, like, growing up in my house, like, we didn't do investing, like, there was no investing. It was budgeting, spend less than you make, budget every dollar, make sure that you're, saving a little bit if you can, or setting things aside. So, for me, when I first started my career and had an opportunity to invest in the stock market through my 401k, I didn't really think about it as investing through my 401k. I just thought about it as putting money in this thing for my retirement. Like that was as far as my brain had gone for that. And then it wasn't until we met where you were like, you can actually, open up a brokerage account. I can help you look at funds. Well, I mean, I had done a little bit of investing research on my own prior to that, but I still was confused on what to actually do, like how to actually do it. Like I had gone to an investing conference, did all this learning about it, and still had no brokerage account open. I was not investing in any stocks. And so I really was like below zero when I started. So it was kind of a confusing place. Like, how, how do I even get access to these things? Like, how do I purchase these things? I thought there was some secret code that I was missing.
Well, yeah, well, thankfully with technology, it's been made so much easier to get access. And I think about, the baseball card example I was just giving, many of us will never play professional sports, but sports memorabilia, besides watching games, is a way that we can participate in the league, whether we're collecting bats,
Yeah.
balls, cards, it's a way that we get to participate in it. And I feel like, having ownership in the stock market is a way that we get to participate in with some of the biggest companies, some of the smartest brains that we would have not been able to participate. Like I don't have the brain. I mean, if I put effort into it, I probably could, but it's just not my calling to go work in aerospace. But I've owned different airline stocks before, and I've gotten to invest into that industry without actually having to work there. The same thing with Amazon or Tesla or some of the smartest brains in the world. It's like, hey, I don't have to work in that particular field to take part in what these companies are doing, to be able to take part and actually have my money work, giving my money a job working with these people
Yeah.
running these amazing companies.
Yeah, and so this idea of owning companies without running companies is what the stock market is all about, is what I'm hearing you say.
Right. So it's ownership in companies. Yes.
Ownership in companies. Yeah, and this was always I think even like back to the original point, like my parents kind of growing up in that area where like the stock market wasn't as easily accessible as it is today. Like you could go online, open a brokerage account, immediately look at the stocks, purchase the stock, get money in your account and purchase stocks. Back in the day, you had to call a stockbroker, right? And they had to do all the buying and purchasing
Absolutely.
for
Yes.
you. So there was a little bit less agency connected
Absolutely.
to investing in the stock market, and you had to have a person that you really trusted, and I'm not sure there was a lot of that around for normal middle class people, right? And so I feel like that mindset has kind of carried over to a lot of people in our generation. I mean, it's getting better with companies like Robinhood and all these, smaller, not smaller, but making it more accessible. But I'm curious what your thoughts are on that. I know
I
that's
mean, a random thought that just came to mind is earlier this year we were watching 1923. It was a Yellowstone
right.
spinoff. And so at one point in the show, and it's in 1923, a person needs to make a phone call. So they go to the place where they make a phone call. The switchboard operator picks up the phone and it dials the switchboard to connect it to another place, and then, and to get someone on the phone. And back then, that's how the phone worked. And if you think about the stock market that way, we had to go to stockbrokers, who's basically like the switchboard operator, to make these moves for us. Now we don't think about calling the switchboard operator when we make a phone call to say, hey, can you connect me to my mom? She's at this number right here. We just hit the mom button on our
Right.
phone and it calls mom,
Yeah.
and it's that simple. But, back in the day, we had to basically, in essence, have the equivalent of a switchboard operator to make a phone call, which we had to use a stockbroker in order to purchase stocks on the stock market. Now we don't do that. We just get on our phone and instead of hitting that button for mom, we open up an app and
Yeah.
we hit whichever company it is that we want to own, the amount of shares, and it literally can transfer money out of our bank account and buy those shares, and we are instant owners immediately.
And I feel like that when you have the ability or the access to do something like that, it can reduce a lot of quote unquote risk because you're in control.
Right.
It's
Well,
not necessarily, I mean, you're more in control than if you were to shell off all, wire money to a stockbroker that may or may not, you know what I mean?
right.
Like,
From that aspect, yes. But then it's like, but now it's like as fast as you can buy it and as fast as news can move, depending on how you're investing, your portfolio can go up and down. Back in the 50s and 60s and 70s and 80s, we were waiting for the news to get new
that's
news. We were
true.
waiting
Yeah.
for the newspaper. We were waiting for
Things were moving a lot
yeah, like
slower.
whereas now, I mean, we get up to date, up to the second news. The president of the United States can tweet. All of the people in the cabinet and on the board of the United States can tweet. Company owners can tweet. Like, in order to hear what a company owner was doing back in even as late as the early 90s, I mean, an article had to be written on them. And how often were you hearing from company owners? How many times will a newspaper write an
Yeah.
article on a company
Interesting.
owner? Whereas literally now company owners can take to Instagram and go live every day,
Yeah,
which
that's
is
wild.
nuts. And so, and you see this when you see, like, in the late, I want to say like 2015, 16, 17, 18, Elon Musk would be taking to Twitter
Popping
at the
off.
time or wherever, and he just popping off, and then the stock is going down, the stock is going up, it's just doing all kinds of crazy stuff. But,
Yeah.
but imagine if we weren't in that time and he would just talk to a news reporter and say all this. We would talk about that article for weeks, the same old news, whereas news that we
Has
get in the
changed.
newspaper is old by the time we receive it.
Yeah, that's true. That's wild. Yeah, so like what are a few common myths about investing that hold people back from getting started, do you think?
I think a big one is I'm going to lose all my money. And yeah, of course, yes. And I want to be clear, you can lose all your money in the stock market, all of it, every dime, but every single dime. But there is a way to invest without losing all of it. And it's fairly simple, I would say. And that is if you buy funds. So you buy, multiple funds that are invested in multiple different companies, and you have a couple different ones. Say like if you're invested in the S&P 500, I've never met somebody invested in the S&P 500 who's lost all of their money, who had just went down to zero. Every company went out of business and they lost all of their money. Now, I have met people who have been invested into one specific company and that company went bottom up and then they lost all the money. We saw this in Enron. You see it in any company that goes bankrupt. And so it's like, hey, if that company goes down and you have all of your money
Yeah.
invested in that company, yes, you will lose all of your money. But if you're in a fund, and it's diversified across the market, and you can even buy broad market funds. You guys have heard me talk about SCHB, which I'm doing the dollar a day strategy. We've been doing it for 13, 14 months now. It's a Schwab broad market fund. It's going to take a lot for every company in that Schwab broad market fund to just go to zero, for every one of them to go out of
Yeah.
business. But now it does fluctuate when the market goes down and market goes up. You see some returns. One thing about owning a fund, which this might be a question that you're going to ask later on, but it's like, if the market just takes off, the fund won't just go up, $5, $6, $7, $8, $9,
Right.
immediately like that. But also if the market tanks, it won't go down as heavily. Whereas, if you're just holding one stock, and let's say you're
Yeah.
holding a tech stock and they report terrible earnings, they can take a drastic dip. But if they
Yeah.
report that they beat earnings, they can take off and go up 5-10%. It's rare that you see that in that type of those fluctuations inside of funds.
Okay. So one myth is that people think they're
You're
going
gonna
to lose all their
lose all
money.
your money.
Okay. Is there anything else you think?
Probably that you need to know more than you do.
Oh,
They think
okay.
that they need to be expert level. I need a finance degree to get
I need to be
into
good
it.
at math.
And I think there's a good amount of information that now, like these custodians, and a custodian is a place that you set up a company. I mean, I said you set up an account to open up to buy stocks and bonds. So it could be like a Charles Schwab, a Fidelity, a Robinhood. You can get now, these custodians offer so much great information on their website about different funds, how to do research, different types of accounts. They have, great customer service numbers that you can call and ask questions. And so you don't, it does definitely lower the bar of information.
Yeah. So you don't need to know as much as you think you need to know.
Right.
And there's a lot of tools and resources out there to help you nowadays
Absolutely.
learn. Okay. I think another one that we've talked about and I felt was a hindrance for me because I'm not a math person. Like numbers have never been my strong suit.
Yeah,
I'm more of like,
that's another one. You don't really need to be overly good at math either. I mean, if you're trying to do technical analysis, I mean, fundamental, if you're trying to do, hey, I'm gonna hop in some technical, some fundamentals, and just getting in, and hey, I want to see what the price to earnings and this and that. But if you're doing funds and you have a long-term strategy, you don't really need to do all that. You just kind of start buying in. Like if you think about, if the person watching this right now is invested in their 401k, you're not trying to, hey, I'm trying to beat the market investing into my 401k. You're putting some money every check into a certain amount of funds, and it just buys a little bit, and you're just letting it roll. And you're like, hey, I have from now until the time I retire for this to make some money. And
and you're
generally,
never doing a math problem aside
right,
from
it's
the
not doing a
percentage of
crazy math equation.
your percentage of contribution, which I don't think I ever really looked at in detail. It was just
The
like I
thing
felt
is,
like
you
I
don't even
could put
have
a
to
little bit more in there.
right. You don't even really have to calculate that. I mean, of course, we have our ADP calculator that we've shared before that will calculate it for you. You can also ask the person who's over HR at your company to calculate what the
Yeah.
percentage is that it comes out. So it's really simple.
Yeah. Okay. So, yep. So those are some of the myths. Got it. And then what do you feel like you do need to know to be a successful investor?
To get started now, right now is the best time to get started. Today, well, yesterday was the best time, but since yesterday,
Was Saturday and the
yeah,
market was
which is
closed.
yes, since yesterday was yesterday. I mean, hey, even on a Saturday, you could set up an account.
That's true.
Even on Saturday, you can start setting up your bank account, and it might take you till Wednesday to get the accounts talking, because we're filming this on the Sunday. You on Saturday you can read a few things and understand the difference between a Roth
Yeah, that's
IRA, a
true.
regular IRA, and a traditional brokerage account. You can read through the documentation that HR person gave you at your job back when you started, that you didn't set that 401k up. You could book a call with somebody at Steadyworth to walk you through it. Our Calendly link still works on Saturdays. That's right. So yes, yesterday was the best day to get started, but now today is the second best day. Let's go. Um, and the question is, what does someone need to know?
Yeah. What do you need to know to be a successful investor?
I think I would say you need to know your time preference, and that means how long you have. When you think, and that's because that's where people get in trouble. It's like, hey, I want to put this money to work, but I need it to make money for me today, tomorrow. What is your time preference for how long you have to invest? Is it this week? Is it next year? Is it 10 years from now? Is it when you retire? So I would say you want to know your time preference. Another thing is you want to know your risk tolerance. And that means is what is the mix between stock, bonds, and I want to put in crypto because I really like it. What's the mix between stocks, bonds, and crypto that and I will even say real estate or alternative investments that your portfolio can handle. And you can learn that by taking a risk assessment questionnaire.
In one of the custodians.
Right. And then the next thing is what is the best way to get started for you? And so that could be a mix of funds. That could be a mix of funds and some individual stocks. And so, that would be the next thing to know. So, what's your time preference, your risk tolerance, and the best way to get started for you, as in, and that's all based on your comfort, on how comfortable you are. If you're like, hey, I don't know what stocks to buy, I have no idea what stocks to buy. Probably the best thing to get started with would be buying some sort of diversified fund that's buying a portion of the market, whether it's a broad market fund, a mid cap, small cap, understanding the different types of funds. They explain this on all the custodians, probably just buying in. And one thing is that when you join the conversation, you start to learn more. So as you start, maybe you just listen to a morning news thing. Like there was one that someone told me about a long time ago called the Wall Street Breakfast. And I used to listen to it. I don't listen to it as much anymore. It's like an 8-minute podcast. But the thing is, if you listen to something like that every day for maybe, let's say, 30 days, even if you listen to it 3 to 4 times a week, after a while, you're going to start picking up on things. The first couple of days, you're going to be confused, but after you continue to, because you're just hopping in the middle of something, but after you do it for weeks, then you're going to say, okay, this is the stuff that they're talking about. Then there'll also be different things that you find that are interesting, and that you'll say, okay, maybe I need to Google that, chat GPT that. And so, I mean, anytime you're trying to learn something, there's always going to be a learning curve. I think I mentioned that earlier this year. I kicked off my crypto journey, and I was listening to several different podcasts. And so one thing I started, okay, there's certain language and lingo that people are using that is going across multiple podcasts. So I'm like, okay, these are the different maybe touch words or buzzwords inside of this. And then there's this one podcast I listen to all the time called Money Mailbag Monday. Jack Mahler's the owner of Strike. And the first time I listened to it, I mean, I understood some of it, but I was pretty confused. Now I've been listening to it for 6 months, and I say I probably understand easy 90-95% of it, but I've been listening to it every week. And now
Yeah.
over and over again, you just start to get more retention
Yeah.
as I'm listening to it more, and as I'm studying a little bit more. Same thing with somebody in the stock market. When you start, you're like, what the heck is all this? But if you start listening consistently to a podcast that's going over the market, a great one is the one from Robinhood, The Week That Was, with Steph Guild. It comes on Fridays at 4:30. It's from 4:30 to 5:30, and it's just an hour. But if you listen to that, you might be confused for a little bit, but then keep doing it. I guarantee you within probably about 6 months, you'll be able to track a few things.
I like that one too because she's really they do a really good job breaking down into simple terms and making it kind of interesting
And
for
you can ask questions.
the common person, and you can ask questions and
Right.
they answer the questions. Yeah, for sure.
Live, yes.
Yeah, so it sounds like, I mean, what I hear when you say that is, you kind of need to commit to learning a little bit. Like you
Ab
can't, yeah, like there has to be some sort of commitment to immersing yourself in the stock market world and kind of understanding it. And whatever that looks like to you will depend on, your level of interest, but also your level of commitment to it.
Absolutely. I mean, there are people who don't know much, and they just buy a couple funds and they just do it. They do what
And
they do.
that's
But,
fine.
that's fine. But it's like, of course, there could be something that comes up that could cost you later. And we call it the ignorance tax, because, you get out of something what you put into it. So could you make money doing that? 1,000%. Could you, be in something better than what you're in, and you don't know, what you
You
don't
could
know?
be making bigger
Yes.
returns, etc. Yeah.
Yeah. Yes, as well. And so, at the end of the day, you tend to get out of things what you put into them. And so, of course, the more you know, and I think there is a point where it's not like you have to know everything and all things every day, but I think there's a certain base level of knowledge. And I don't know how to say, I don't have a rubric of, hey, once you get to this level, you're done. But I would say, I think you will know when you say, I'm at a point where I'm pretty comfortable in what
You
I know.
know, and we always say this too is like the more, well, I say this because the more I've learned about the stock market, the more I've sat, and listened to or secondhand listened to, some of the podcasts that you listen to. Um, I feel more comfortable in the conversation. I feel like I understand it a little bit more, and I feel like I'm able to, talk about it with more confidence and feel more confident myself. Like if I needed to go purchase a stock, I could go do it and be fine.
Sure.
Um, but one thing that you were talking about even just now is you were kind of talking about listening to these different things, picking up on key terms. What are some of the most important terms or concepts a beginner should learn?
I think, I would say one concept that you want to think about is maybe like supply and demand, because when, supply is high, things aren't readily in, like our water supply, is that we have a high water supply. So we're not really, the price of water is not that much.
Hmm.
It's cheap, whereas if you think of like buying
That's in North Carolina, not in
I mean,
California.
just I mean, in North Carolina, but also in developed nations as a whole, like across the, when you think about like all throughout America, water's in theory pretty cheap. Now, if you were buying a filet mignon steak, you're going to pay a lot more than you're going to pay for water. Why is that? Maybe because top tier steak isn't as readily available as water is.
Okay.
And so, and the same thing, you want to understand that with stock, and there's times when stocks are very in demand, particular ones, and the price shoots way high. And then
Okay.
there's times when they're not as in demand, and then the price comes down. So I would say, so understanding supply and demand and how the different terms, how the different things work with that. That's if you're investing in individual stocks. If you're not, and you're just buying ETFs and mutual funds, and I don't want to say just like you're just doing that. That's a great way to do it.
Hmm.
I would say just understanding what those funds are invested in would be the best one.
Okay.
So
Well,
like, it's like, what are the companies in those funds? Am I buying an international fund, a large cap fund, a small cap fund? And yeah.
okay. And so large cap.
Yeah. So these
That
are
is
large companies. And I don't
large
know
companies.
yeah, I don't know what the market cap of a large cap is off the top of my head,
Okay.
but when we
That's
think
fine.
large cap, a large cap fund is going to be like Microsoft, Apple, Tesla, Facebook, Nvidia, like
Right.
the big ones. So a
Right.
company that holds those, that would be a large cap fund.
And then small cap
Yeah,
funds are
I
small
can't think of
companies.
yeah, I'd have to Google what a
That's
small
okay.
what a example of a small, but they have small cap companies, they have mid cap companies, medium size, then they have
Okay.
international companies, funds that have international ones. Then they have different types of bond funds as well.
Okay.
And they have crypto funds. So
That's right.
yeah.
Okay, so there's obviously, there those are some of like the things that you would invest in if it were stocks or bonds or funds.
Right.
Those are kind of like the three categories that
Right.
you would invest in. And then what you're invested in is either large cap, mid cap, international, etc.
Yeah, large cap, mid cap,
Okay.
international, small cap. Yeah.
Okay. Another word that I hear a lot and I still only partially understand is dividends.
Mm.
Could you explain that one quickly?
I would say so in a company that it was like when you I wanted to see, I would say dividends. I'm trying to think of something to relate it to, like royalties. And so when
Okay.
you hear about like
Book
somebody,
royalties.
yeah,
Like book royalties. Is that what you're saying?
I was trying to think of like like an analogy, yeah, but like a movie royalties or music royalties, which that's maybe not may not be the best way, but it's like companies make money and then they can pay out a dividend, and so like a company like Coca-Cola, which is a dividend paying company, they can get they'll pay out
When they
dividends on
make a
their
profit.
right, yeah, so they'll pay
Okay.
out some some money on their shares that
To
people own.
stockholders.
Right, and so and you
Okay.
see that, but you see some, not all, but some like tech companies, if they're growth companies, they may not pay a dividend because instead of paying out dividends to their stockholders, they take that money and they reinvest it into the company
Got
to
it.
make it keep making, maybe they're doing it in R&D, research and development or something. Whereas like a company like Coca-Cola isn't really doing R&D. I mean, maybe they are, I don't know, but
Right.
that they're they're
Got it.
Coca-Cola. So yeah,
So
so
it's
they'll
like you're investing in a company, that company makes some money, and
yes.
then based on the profit that they make, they'll pay extra to their stockholders. Is that
Well, they
right?
pay out a portion to
They
the
pay
stock.
out a portion to the
Yeah, and so like
stockholders.
yeah, so you get a little bit. So like and depending on how you have it
Okay.
set up, you can choose to get cash for your dividend. So it could be whatever amount
Or
per share,
reinvest the
or you
dividend.
can have it reinvest and they'll give you fractional
Okay.
shares. And so I usually like to reinvest. Um, so that my shares can keep growing. But there is an argument for getting paid in cash, especially if you're in retirement age and you need to raise cash in your account. And that's one way to raise cash in your account
Yeah.
each quarter without having to sell.
Okay, got it. And you pay, obviously you pay taxes on the dividends, right?
Yeah.
Or no? You do.
I mean, like what? Well, if they're
You pay taxes on
reinvested,
everything.
if if they're reinvested back into stock and you hold it for a year, you hold it for a year, you pay long-term capital gains. But if it just comes as cash and you pull and you're using
So
it,
that would that be taxes regular income?
any short-term investment is taxes. Short-term capital gains is tax regular income. Once again, it also depends on which type of account you have this in. So if
Okay.
it's in a retirement account, you wouldn't pay taxes on the
Right.
dividends, because you would pay taxes when you pull the money out, and this tax is ordinary income,
So if
all of
it's
it.
just a regular brokerage account and
Right.
you
So,
get a
but on a
dividend.
regular brokerage account, yeah. But yeah,
Interesting.
one thing about taxes, you're not avoiding them. Everything's getting taxed some way or
Right.
the other.
Yeah, totally. Okay, cool. I think that's helpful. If anyone has any, if you're watching and you have any other questions or terminology that you want us to kind of talk through, please feel free to drop it in the comments. But what's the biggest mindset shift someone needs to make to see the stock market as approachable instead of scary?
Um, it's like facing if you're fearful of it, I would say it's the same mindset you would need to do to face any fear. And a lot of times we can be fearful of things and it can be not approachable to us because we don't have an understanding. And so as humans, we can fear the unknown. It's like, hey, if I go in here, I'm gonna fear. We fear loss. So one reason why we might fear loss is because it's like, hey, I put my money in here, I'm gonna lose it. Like I could have just went on vacation with that money
Yeah.
and enjoyed it, right? And
Right.
so, in order to have a shift in mindset, in order to not see it that way, you have to educate yourself in a certain way. I've talked to people who have a thing that they don't want to drive, like they've never gotten their driver's license.
Oh, interesting.
And so I do know a few people like that, but there's some sort of fear there as well. And maybe it's the fear about them operating a car or what other drivers are going to do. And so, I
Yeah.
mean, I think there's also a similar fear about firearms with some people. It's like, hey, I don't, guns kill people. I don't want to shoot a gun.
Yeah.
But, if you learn how to operate a firearm, you'll have a better understanding of how it works.
Right.
And so, one thing about having a good understanding about a firearm, how it works, is that if you come across one at someone's house or someone has one, you can make sure that they're operating it correctly so that they don't accidentally shoot you. And if you come across one and no one's around, you'll know how to pick it up and handle it, make sure it's unloaded, or maybe it's supposed to be loaded, and you'll know the thing to do. Similar to stocks. What if you all of a sudden inherit some and you know nothing about it and you fear it?
Yeah.
You might sell everything and incur a bunch of long-term and short-term capital
And have no
gains
idea.
and have no idea because you're like, oh no, I don't want that. I just sell it and get rid of it.
Yeah.
Where it's like, that could be the basis of your new wealth. And so, but you
Yeah.
don't know.
Yeah.
But you don't know. And so one good thing about educating yourself on how to handle them is, even if you come across someone, even if your long lost great uncle from another country leaves you money, you'll be okay. I wish I would have had this article to bring up, but I was reading through news. I was on the platform that is the source of all news, Instagram, of course.
Yeah.
And so I'm being funny, and maybe that's not a good joke, but I saw this thing and it was talking about this soccer player. I don't remember his name, but you can Google it. And I believe he was a Brazilian soccer player, and it was saying that somebody a billionaire, had changed their estate planning documents and left him their entire estate. This person didn't have any
Oh,
kids, and he liked the way this person handled themselves on the field and the relationship that this person had with their dad, just from reading about them and watching them on TV, and decides to leave his whole estate to them.
that's
Now, they're
crazy.
they're reviewing this to make sure. Of course, they're reviewing his estate planning documents before that they execute and give the money to this person. So making sure everything's legit. But now imagine if this person knows nothing about managing an estate, and likely they know nothing about managing $1 billion estate, so they're going to need some help. But imagine if they're adverse to everything and they're like, I don't want any of this. Not like I don't want it, but just sell everything and just hand it all to me in cash. I can guarantee you that eventually that month that they're not going to be a billionaire for long.
Yeah.
Because that person got to a billionaire by having assets, understanding how they work, getting them to grow.
Yeah. Yeah. Interesting. That's a crazy story. I still can't get over
Yeah.
that
And if
story.
you think about, even the billionaires we have now, they get there by putting money to work in assets. Like, I don't know if Beyonce is a billionaire or not, but if she is, it's from her putting money into assets. She can't sing enough to make $1 billion. Not, I mean, maybe to make $1 billion, like the
But
whole,
not keep
but
the
not,
billion
but
dollars.
maybe the tour might make a billion, but not to bring home a billion. Steph Curry can't shoot enough threes to make a billion right now, but his assets can. And so that's the thing, is that people who are billionaires, they make good money, and then they have their money inside of companies that are constantly growing. But you don't have to be a billionaire to do this. Think about this right now. Like, I think about the different companies that I have money invested in. Guess
Yeah.
what? Tomorrow morning at 8 a.m., whether I'm brushing my teeth or if I was still asleep or I'm servicing a client or whatever I'm doing, those companies that I have money invested in, they are working tomorrow
Yeah.
morning. They're
That's
working
right.
Tuesday. They're working Wednesday. They're working Thursday. So my money in those companies is still working. And the same thing with you. So if you're putting your money into companies, no matter when you're on vacation, those companies don't go on vacation with you. Your money can outwork you day and night. If you're invested in international companies, and let's just say one's Australia, and right now it's 7 o'clock, almost 7 o'clock here, and it's 8 o'clock in the morning there. They're going to work while we're about to go to bed on Eastern Standard Time, and that
Right.
money's working over there. And so
Yeah.
that's the great thing about investing your money, is that it can outwork you. It can outlive you, and it can outwork you.
Yeah, and it just like the fear of the unknown, or kind of understanding. I feel like, when we're talking about mindset, of course I can go on and on and on about this, but like when we're talking about mindset and different things that you say or do, being able to track back to what that is like what behavior, or what thought is driving that, is really important, and
Absolutely.
actually fact checking the thought, because I think a lot of us think that what we're thinking is true and valid, and sometimes it is true and valid, but other times it's just based on our experience. It's not necessarily based on the truth. And so I think a
That's
lot
right.
of people think the stock market is scary because they've heard of someone who lost all their money, or they don't know anything about it and they're scared to lose their own money, or whatever the fear or thought is. And I think it's so important when we're talking about mindset shifts to examine what you do, and then trace back, right? So what are you doing? You're scared to invest in the stock market. Why? Right? Like, just ask yourself those questions and really do some reflection. Maybe use ChatGPT to help you kind of sort it out. I mean, I think, it sounds crazy and funny, and I've read a lot of different things on LinkedIn about how AI, can't replace coaches, but in a lot of ways you can ask it question and have it bring you some insight, and
Absolutely.
use it to your advantage. Of course, not everything that it spits out is true, so fact check it as well.
Right. I mean, I would say, and if you wanted to use some AI, say, hey, I don't know anything about the stock market, or maybe just do a data dump of everything you understand about the stock market. I understand this, and this. And then say, hey, I would like to learn more. Can you create me, suggest books and suggest YouTube videos of different things that I should read and learn so that I can start understanding? And just like anything, when you're collecting information, some information you get is going to be helpful and some is not. But, as you get better at going through and collecting information, the faster you'll be able to say, okay, like this isn't helpful. This is good. This isn't helpful. This is good.
And one thing I always do when I'm putting inputs into ChatGPT, especially about things that I don't know, or things that I maybe have a particular opinion about, but I want to be challenged. I'll say, what is the evidence around this thought or this belief? Like, what's actually out there, and then have it kind of produce some different evidence, the pros and cons of each thing, and then I'm actually trying to use logic to read through the research versus what I feel like is true, or the emotion behind it. And so I have used it in that way too. Because on Instagram, you can get really persuaded easily towards a certain topic, like, oh, everything is all, it has to be all stocks or this or bonds or, or crypto or whatever it is. And it's like, what would be a reasonable, rational approach for someone who's just getting started and knows nothing? And just see what it
Absolutely.
says.
And I think, Be curious. It's the best
Yeah,
thing that
follow
you can
your
do.
curiosity. I was gonna say the
Yeah,
same
be
thing.
curious for sure.
Be curious and, take everything with a grain of salt, but really, really press in and use it as a tool to your advantage to help you kind of accelerate your journey. So, anyways, that's our little plug for ChatGPT and AI.
Yes.
Let's see. What do we got? We've got we started a little bit late today, so I'm going to try and wrap us up so we're not running too long today. What are some simple ways an everyday person, I think we've talked about this a little bit, can learn how the stock market works? I feel like we just
Sorry,
talked
I
about
didn't
that.
put my phone on silent and I keep different. Yeah.
Yeah.
So what is
Simple
some
ways.
simple ways?
I think we just talked about that. Use ChatGPT,
Yeah.
use YouTube. Um, I don't know that I would talk to friends and family
Right.
depending
I
on their
think the
perspective.
thing is, once again, as you start, I would say, and then take notes. So it's like, whether it's digital or you're writing, because you'll start one way that I like to learn when I don't know anything is that I'll like say I'm researching a recipe. And this recently happened because we were making pound cake last week. We talked about it last week. My brother-in-law made some this week. But when I was looking at some different recipes, I started looking, what are all the commonalities in these recipes? They're all using 3 cups of cake flour, 3 cups of sugar, 8 ounces of this. And so start looking, what are all the commonalities and what these people are talking about?
No, that's good. I like that.
And so then you'll start to see, okay, these are the commonalities. Then you'll see, okay, this person's touching on something different. So it's like this person touches on the main things and this person touches on something different. So then you can start to see, okay, the things that aren't the commonalities that aren't in common are those things that I want to incorporate or not. And
Yeah.
so, and same thing with the recipe. It's like, different people are putting in different flavors or
Yeah.
different this or
Yeah.
different that. But generally, the flour, the sugar, and the bake time is going to be the same. And the
Yeah.
eggs.
Don't switch your sugar for salt.
Right. But other than that, there other things as far as flavoring can be,
Yeah.
it can be on preference. And so the same thing with investing. It's like, start listening. It's okay. Is what this person's saying is, if there are 3, 4, 5, 6, 7, 8, videos you're watching are saying, some of the same thing. It's like, okay, well then that they must be going somewhere with that.
Yeah, and I think what you're speaking to is like looking for principles versus
Right.
perspectives, right? Because there are principles when it comes to investing, and then there are perspectives about investing. And I think you want to understand the basic principles first before you start developing preferences for how you want to maybe do things, because we all have different ways of doing it.
Absolutely. And then, of course, you're going to be looking for just like, I mean, I don't even have to say this, but I'll say it anyway. You're going to be looking for somebody who communicates in a way that you like it because,
Yeah,
because then it's easier for you to get the information. If the person is not communicating in a way that,
yeah,
that you just don't resonate with, then you're going to be like, hey, I'm not listening to this. So you're going to,
yeah.
of course, you're going to want to find someone that communicates in the way that you like it so that you can, attend every week, like how you do here with Sundays with Steadyworth,
That's
just
right.
like that.
That's right. So, what is one small? I'm going to close it out here unless you
Sure.
have anything else, but what's one small step someone could take this week to start learning
So many
or
small
doing?
steps. Okay, I'm gonna give you my top 3.
Yes, please.
I'd say one is to, if I was going to get started, I'm going to be specific. I'd get on the Charles Schwab website. I like Charles Schwab, so I'd get on their website. They're not paying me to say this, but I'm going to be specific. So I'll say them, and I'd say Fidelity and Robinhood. So I'm going to give you 3 of them. So I would choose, I'd go to all 3 of those websites, see which one is the most visually pleasing to your eyes.
Hmm.
And which one is breaking down the stuff the best, to your eyes
In a way that you like. Yeah.
in a way
Okay.
that you like, and then you can open up account at one.
Great.
Yeah. And then after you open up account, each one of them has educational materials on how to get started. And so there's going to be mainly 3 different types of accounts you would look at opening. Well, it's going to be either an individual brokerage account. Of course, you can have a joint brokerage account, but I'm not even going to go into that. I'm saying it's either going to be individual or it's going to be a type of a retirement account. So one's going to either be a Roth IRA or a regular IRA. They have all of the rules and stuff you need to know on there. They're going to explain to you everything. If you don't understand it, put in the ChatGPT, it will explain it to you. So I would say go to all 3 of those sites, figure out which one you like the most, open up an account, maybe open up an account at 2 because you can't make up your mind. Who knows? And then, then I let's talk about getting started. One thing about with Robinhood, you've heard me say this a gazillion times, so I'm gonna say it again. You can get started on their platform with as little as $1. And so if you don't know, like, hey, I'm not sure, you can take $5 and buy, one ETF for $1, exchange traded fund for $1. You could buy a stock for $1. You could buy a piece of crypto for $1, and then do something else with the other two, and then you can track them all for the next month and figure out which ones do you like and do you not like. Also, all of these platforms have portfolio builders. So even Robinhood, they have a portfolio builder where I think the minimum is $20, but I don't remember. And they'll actually show you how to buy fractions of different funds to help you build a diversified portfolio. Schwab has a portfolio builder. I haven't used Fidelity's portfolio builder, but I'm pretty sure that they have one. They all offer the same stuff. And so, find a platform that you like that when you get on it, it's like, hey, I enjoy getting on this. Yeah. I mean, I like getting on Instagram. I don't like getting on TikTok. They're the same though, but they're different. Right. Robinhood is the same as Schwab, but different. Yeah. Fidelity is the same, but different. And so, they all do the same stuff, but some of them focus a little bit more on some things. Yeah. So that's what I would say. They're all kind of the same, but they're all a little bit different. Ask ChatGPT, what is the difference between Robinhood, Fidelity, and Schwab? Make me a chart. It'll make you a chart. And so I say that's how you can get started. I'm a hands-on learner. If you want to not be a hands-on and don't want to put any money in, you can just still open an account and then figure out what stocks or fractions you want to buy. And it's going to be a lot more manual. Write down exactly what you bought on what day and how much you paid for it with some fictitious money, and then track it over the course of the next whatever.
You can do that on the platform too?
No, I would say I don't know that that's called paper trading. I don't know that they allow you to do that, but I'm saying you could manually do that.
I see what you're saying.
Until you're comfortable.
Okay, got it.
But that's why I like to start with $1, because I understand that everybody's in different positions, but most people can probably spare $1, probably a little bit more.
I agree. At least 5.
Yeah, easy. I was going to say 5 to 20, probably.
Yeah.
But cool. But you start with $1 it's good. And so,
very practical.
Yes, it's not $1's not. You're not paying rent with $1. I'm guessing you're not. I don't know where you're living at if you are, but.
And I feel like when I started to actually invest for the first time, each month I did it, I felt more comfortable and more excited, and then I was more connected to it, the stocks that I had bought. And so I was checking in on them more. And then I was like, you know what? I could put a little bit more in here. Okay. I could put a little bit more.
It's because when you see them grow, it can be exciting.
Just the idea of starting and getting involved and taking some ownership over it actually got me more interested and more motivated to do it. So
absolutely.
Taking that first step, we broke it down in really simple terms, hit one of those, those platforms, Charles Schwab, Robinhood, Fidelity, open up an account, see which account makes sense for you, read all the terms, make sure you're doing, if you have any questions, please do not hesitate to reach out to us, leave a comment on our channel. We'd be happy to help you. Of course, you can always use your best friend, ChatGPT. I'm not sure if you guys have a name for it or not. I don't know. Did you name yours? I forget.
I didn't name mine yet.
Yeah, we haven't. We have friends who have named their ChatGPT person, but we haven't done that yet. So anyways, I think that's going to be all for tonight. Do you have any final words of encouragement for anybody?
If you made it this far, we appreciate you. You are a real one. Also, please feel free to subscribe. We're trying to get our message out to the masses. And when you subscribe, when you like our video, when you share it, when you comment, it helps the algorithm and it helps us to get our message out. We're working to equip this next generation of wealth builders who are working to live a life that they're excited about today while staying within their means and building a financial future that they're excited about. We want to help you and we want to help them. So please help us get our message out. Have an awesome day. Happy Sunday. Have a great week, and we will see you next Sunday.
See you next week.